Hey, good morning, folks. Happy Saturday to you. I hope you're having a fantastic weekend. Coming at you live with this week's market wrap. So, a lot to talk about. Um, if you've been following me the last several weeks, you know that a few weeks ago I sold out of some of my swing positions, sold out of some long-term holds, raised cash, took some tiny uh, bearish type positions and SPXS, and also took a position in TVIX in anticipation of some potential volatility. And it's been a great place to be. Cash has been a great place to be for the last several weeks because of the fact that we've been in a pretty choppy market. I have been participating in short-term day trades, intraday trades, and also some short-term swings, 2, 3, 4 to 5 days swings that have worked out really well. So it's been a great place to be. And this last week, I was actually thinking that it could be a pivotal week in terms of us breaking through some potential areas of significant support. And we actually did it on the day of the release of the Fed minutes, but the follow through was actually pretty weak. And if you read my blog on Friday, you'll know that I mentioned that the Bears had every opportunity to really take control and break us down. And actually, the Bulls wound up winning by the end of the day because even though we pierced that level of support that I've been watching specifically in the S&P 500, we were unable to close below it. And that is what is important to me. It's not what we do intraday, it's where we close. And in my blog on Friday, I said I'm not going to be pressing my short biased ETFs or volatility trades until I see a clear conviction close below 203 in the S&P 500. And we didn't see that. In all actuality, we wound up seeing a fairly decent little bounce on Friday. So, let's there's a couple of other things that I mentioned in the blog that I'm seeing that could take me out of the bearish camp and put me back into the bull camp, at least for the near term. I'm talking, for the next 2 3 weeks. I think we could potentially see some bullish moves in the market. Now I'll go ahead and break it down and show you why I'm thinking that way. Gilead is just something I'm checking out because of the fact that it's at a pretty key area here at this 81.56. But I'm not going to go into that. I've got a list already for tomorrow's ticker TV stocks to watch. If you want to see what's going on there, come back tomorrow morning, 8 a.m. Vegas time, and we'll go over it live. But this is this week's stocks to watch list and the performance for the week, and had some really nice winners. CWEI was a really beautiful looking flat top breakout. It actually wound up going higher. Let me pull this up real quick. CWEI actually got up to 28.50, which was exactly where I felt as though it might run into some resistance. Let me back this out onto the daily. Really nice pop in CWEI. Good looking flat top breakout. And now it's pulling back and flagging, maybe consolidating for a bit more. But good list of stocks to watch last week, and I think I've got a fairly decent uh, list for the week coming up. So let's go ahead and start taking a look at the markets and the things that have kind of taken me out of the bearish camp and put me more in the bullish camp, at least in the very short near term future. So the Nasdaq managed to climb back above this little short-term trend line right here, testing these moving averages. And the thing that I think you really want to pay close attention to is the SMH, right? Uh, SMH had a really impressive week. It wasn't just the AMAT earnings that actually, sent it spiking on Friday. Look at that AMAT, right? Closed above, broke over this price resistance here, right? Closed nearly at the high of the day. I mean, it does have a gap on the daily that now potentially needs to be filled. Broke over this trend line. Very impressive move in AMAT, and that could give the SMH some continued. I mean, it was on massive volume as well, 53 million shares. This could give it some, the SMH more runway if AMAT continues to climb. But let's take a look at this SMH and the performance that it had over the last week. So, there were 3 good days, 1, 2, 3, right, of impressive days with the SMH. Now, it is coming up into this trend line and will likely experience some resistance right around the $55 mark. Okay, and then we could say pull back, and then maybe it bounces. But SMH was impressive, and that is something that I'll be paying close attention to next week to see if we get any kind of follow through. And if we do, I think that will also then bring the NASDAQ up with it. And so let's take a look at a couple of other things that are on my radar and why I think we might get some bullish action coming up for the next 2-3 weeks. So the part of the reason why even though the Fed came out with those minutes and they were relatively hawkish, indicating that they were going to raise the rates come June, only 28% of economists and analysts actually believe that the Fed will raise the rate. Okay, so there's not a lot of belief out there that the Fed is going to raise the rate in June. If they don't raise the rate in June, then it'll get pushed out to July. So the reason why I'm kind of so short term with the bullish feeling is that if the Fed actually does raise the rate in June, that could be the catalyst that sends the markets lower. Now, the IBB was something that over the last few weeks, we got concerned, got a little bummed out that we had broken down below these 2 areas, broken down below this area of potential support, right? So what had happened is we had this little flat top breakout going on. We broke out over 270. We started bouncing around, and it looked as though we were going to take out this area of resistance right here, and we wound up failing. And then we broke down further below our area of potential support. So that was looking as though the IBB may come down and test this long-term trend line and break below it, right? Which also happens to coincide with the 200-week moving average, and that would have been pretty bearish. What happened last week is that we did not make a lower low, right? We actually made a higher low, and now we're kind of consolidating, building up a little bit of energy as we come up back into that 270 area. So what I'm thinking is that we may get some money flow into this sector, which has been really beaten up, get back up above this 270, and maybe start bouncing around up here in the 289. I think eventually what we try to do is we try to take out this trend line and take out 300, maybe even take out the 200-day moving average. Now, what could be the catalyst for the IBB? Well, glad you asked. Where is it? I had it. It's not here now. Hold on a second. I'll find it. There it is. So coming up in June, June 3rd through the 7th, we've got the American Society of Clinical Oncology. This is a big, big event, right? Every year, big event, and we've already seen a lot of the biotechs start to release data prior to this event. And there will be a significant amount of more data coming out at the event. So there is a possibility that we could see some of these biotech names start to run in anticipation of the event, right? And then there's going to be obviously some winners from the event that release positive data. There's going to be some losers that are going to release bad data, but this could put the whole biotech space in play. So that's one of the reasons why I'm a little bit bullish. And then let's take a look at the IWM. Which actually closed a little bit above this trend line, this little short-term trend line on Friday, okay? And what I'm looking at with the IWM, I mean, again, this had every opportunity last week to break down, and it held support relatively well. It's testing this trend line here and also testing the 200-day moving average. Now, if you've been following me for a while, you know that I also pay close attention to the 50 EMA, 100 EMA cross. And why do I pay attention so much attention to the 50 EMA 100 cross? Well, look, when you get a cross in either direction, typically the index or the sector tends to move in the direction of that cross for a fairly significant amount of time. So, and you can see that from back here when we cross below, right? Look at what the index did the whole time that the 50 was below the 100. It went down. So we just in the end of April crossed above, okay? And we seem to be holding it fairly well. It's consolidating, it's basing. And that leads me to think that we might have a pretty good move higher. Now, look, there's still a tremendous amount of bearish tone out there because of retail earnings and because of other things that have been happening. There is this, and there's a big short position. And we know that when things get, everybody gets on one side of the boat, that can set up for a pretty powerful move higher. So that's another thing that I'm looking at with the IWM. So let's take a look at the S&P 500. And really, the thing with the S&P 500 was that I was looking for a break below. Everybody was looking for it. It wasn't just me. Everybody was looking for a break below 204, right? And we got that. We break below 204. We actually got all the way down to 202. And I was getting excited because I was thinking, okay, if we close below 203, with conviction on some big volume, then I'm going to start pressing my short positions or my short ETF positions and start pressing volatility. And we actually wound up snapping back and closing back above 204, right? And that held as support. It was very impressive. So now, again, here we have the crossover back here of the 50 and the 100, and it looks as though it's just kind of consolidating, building up some energy before it makes its next move. And the fact that we held this area, to me, was fairly impressive. So let's take a look at another thing that happened last week. And we talked about this last week as being a potential to happen, was the fact that the XRT, which was getting demolished because of the the typical mall operators, the Dillards and Nordstroms and all those guys, was getting pounded because of their earnings. And then we had some big box retailers, right? We had Home Depot, we had Walmart, which actually surprised and put in a pretty nice number. Had a big old gap up and then follow through. Now it's coming into some potential resistance. Wouldn't be a shocker to see it pull back, but we did get some positive news out of the space. And I don't trade retail, but could we see more of a continuation of a move up, maybe come back up into these moving averages? We certainly could, and that would be positive for the markets, right? Another area that we were looking at was the transportation sector, and that actually held up fairly well, bouncing up into this short-term trend line. Oil oil and energy. Oil has held up really well. It seems to have stabilized in this area, and we've had a lot of bankruptcies. And I think we're still going to see bankruptcies. The weak are going to get weaker. They're going to disappear. We've seen a ton of bankruptcies, but that also means that the strong will get stronger, right? And if you look at the XLE, we're consolidating nicely, right? And then look, we have the 50, 100 cross right here. And look how long when we were below when the 50 was below the 100, how long that lasted, right? And the direction that the index went. So, we're over the 200-day moving average, and we've got this 5100 cross. We're consolidating nicely. It appears as though we've stabilized. Maybe look for some more consolidation before we take another leg higher. But I still like the energy names in the energy sector. Wouldn't be a big shocker if we just continued to chop around a bit, though. So let's take a look at the dollar. So the dollar has had quite a little run, right? From 20, basically $24. Had a nice little run over the last couple of weeks. If the dollar strength continues, that could put some pressure on some of the multinationals, right? And some of the big names like GE and Procter and Gamble and those types of guys, you might see some pullback in their share price. But actually, a stronger dollar is pretty good for um, some the companies that aren't impacted by foreign currency exchange, right? So a lot of the small cap companies that just do business here in the United States. So that's something to keep an eye on. Watch the strength of the dollar, and of course, we did see gold and actually pull back on the weaker dollar, and the miners took a bit of a hit, right? Which have had an amazing run. Let's see, where's GDX? And GDXJ, right? Gold actually closed down on Friday. JNUG and Nugget, which were the real big high flyers, starting to get a little bit sloppy. We talked about that last week. If the dollar continues to strengthen, I think you could potentially see the miners and gold continue to suffer a little bit. So keep an eye on that sector. High yield and junk, interesting, holding up really, really well. Look, we just got a 50-100 cross in JNK as well, which is kind of interesting, right? So this high yield stuff, I think you want to keep an eye on that. IPOs. So look, we have a list of IPOs. I think 6 of them potentially coming out next week. We had 4 this week. So the IPO market is starting to pick up a little bit, right? Which kind of suggests that there's an appetite for risk out there. So we'll see if that continues. That's kind of positive, right? Let's see what else we got going on. Uh, solar, I'm still, the jury is still out on solar. Maybe it's trying to find a bottom. Maybe it's trying to base out a little bit here, right? That is possible. I'm still not really crazy about the sector or the way the chart is looking right now, but we'll see if maybe it picks up a little bit, especially if oil continues to climb. Uh, Cybersecurity is an area that I definitely like, and I'll show you why. Cyber had a little pop, right? And that's because of the chatter that we've had about the Swift Bank and the hacks that have been going on in the banking industry. So you're starting to see some things happen with cyber and hack. And I do have 2 favorite names in the space, but you're going to have to come by and watch the Ticker TV stocks to watch tomorrow, or watch the replay if you want to find out what those are. But Hack also had a nice little pop, consolidating a little bit. We'll see if that sector gets some action, some follow through potentially next week. Let's take a look at home builders. We got a decent home building report on, was it Thursday or Friday? Had a little, I think it was actually Friday, had a little pop there. We get some new home sales data, I think early part of next week. That could be a sector to keep an eye on. Let's see what else we got here. XAR. Aerospace and defense had a little bit of a pullback. Lockheed Martin pulled back a little bit, but I still like this space, right? If you look at Lockheed Martin, it basically came right up into the top of this channel. It's pulling back. Maybe it comes back all the way down to this 227 area, finds some support and bounces, but I do like the space still. Raytheon, see if that pulled back. That also pulled back. Healthy pullbacks, I think, in these. Northrop Grumman. They all look almost identical, right? Little pullbacks. If you're looking for long-term investment type holds, look for areas where there could be some significant support in these names, and put them in your long-term hold account, because I don't think it matters who the next president is going to be. I think defense and aerospace will continually be a good place to be involved. Industrials actually pulled back a little bit. Like I said, some of these big industrial names, if the dollar continues to move higher, could feel some pressure. And I think really that's it. I mean, listen, I did not dump my SPXS. I did not dump my TVIX. They're very tiny percentages of my portfolio. If they're a hedge right now, they keep me clued in to what's going on in the markets, right? Because if I start to see a spike in TVIX, if I start to see a spike in SPXS, I'm going to know that maybe something's going on, that I need to try and search and figure out what's happening, maybe look to press my bets. I mean, they're very small and they're hedges. If the market rolls over, it could stay. Look, now that I'm going bullish, right? Now that I'm getting a little bullish, that actually could be the catalyst that we need to take us down. Just kidding. I'm not really. I mean, it could happen. So, look, there's some interesting things going on out there. I think you want to pay attention to the SMH. You want to pay attention to the dollar. You want to pay attention to the IWM. You want to pay attention to the IBB. I think those are some areas that make sense to pay attention to. If we get some strength in those areas, you're likely going to see the markets move higher. And hopefully that gives us some really great trading opportunities, okay? All right, so that's it, folks. That's where I'm at for this week, this week's Market Watch. Join me tomorrow, 8 a.m. Las Vegas time, for stocks to watch for next week. And if I don't see you there, good luck trading next week. Enjoy the rest of your weekend, and I'll see you all next week.